I was having camera troubles. My IT department sent a new webcam. The old one I had lights on it, so it had better lighting,
Anyway, Ron, we are now live. So welcome everybody to the LendIt Fintech Weekly News Show. My name's Peter Renton, Chairman and co-founder of LendIt Fintech, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
I'm great. And the person you heard chatting at the intro is none other than Ron Shevlin, Cornerstone Advisors. How are you doing, Ron?
Doing great, guys. Thanks a lot for having me back.
Great to have you.
Of course, great to have you back.
Yes, indeed. So let's kick it off. I mean, I feel like we need to sort of start on the financial impact or the fintech impact of the Russian invasion of Ukraine. It's obviously causing ripples all around the world, and we feel for the Ukrainian people. But wanted to kind of start on some of the moves that have been made, because in a week's time we've just seen an amazing coordination from many of the major Western countries, and including financial sanctions. And the first thing I want to talk about, this is an article in American Banker that, and others covered this article as well. Visa and Mastercard have basically disallowed the use of their product in Russia, and they have 72% of the market there. E-commerce, using a credit card at the local small business, not possible anymore for most banks. I'm not saying they hit every bank, but I think all the major banks that were part of the list for the sanctions they've hit. And so the Russian people are hurting, but this is it's amazing how quickly this happened on Monday, I think. So this has really been a big week for the financial system and how they've all come together. Thoughts?
Visa and Mastercard are still obviously big dominant players and around the world. I think the more interesting question, I think long term, at least to me, is with the advent of crypto and the ability of evading sanctions with crypto on a very small scale, albeit because its infrastructure can't really handle large scale yet, is kind of how that dynamic plays out with the eventual regulatory framework that'll be put around crypto, and the nervousness that there is in Congress that there was a lot of power wielded in a pretty short time by U.S. I guess legislators and the president to impact Russia and their economy. And I know there's a lot of fear in Congress that if crypto were to gain large scale adoption, and the infrastructure issues get better and they can compete on a scale with a Visa and Mastercard eventually, is what that means for sanctions and stuff like this, and will it hurt one of those big tools that we use in situations like this, which I don't know long term. I think there's lots of people that can argue both sides, but it was done pretty rapidly here, and it's still a huge weapon for us when it comes to situations like this around the world.
Mm-hmm. Ron, what are your thoughts on the Visa Mastercard?
Well, Brett moves? King won't be happy because I guess checks could come back to life here. And right. I don't mean to make light of the situation, but I guess if you're, reality is that's their, have the run on cash, and they will revert back to, non-card-based, rails-based forms of payment. What I think is just kind of really sad about this situation is I would venture to guess that the majority of people in Russia don't really want this war. They're the ones being punished for this. And I think the thing that I just don't know, I'm no political expert, but just can't help but wonder is, and believe that that Vladimir Putin knew there'd be sanctions, knew what form they would take, and either had plans for them or didn't care if it had negative ramifications on a wide number of Russians for some period of time. Right. So it's to some extent it's a great weapon. It may turn out to be more symbolic than anything else, because I think after a certain period of time, they got to reconsider who are we really hurting here with the sanctions.
Right, right. Well, I want to go back to something that Todd was talking about, because there was lots of articles written. I actually listened to 2 podcasts on this topic as well, about crypto and its impact on the Russians and Ukrainians. And there's been some evidence that I've read about where, the ruble into Bitcoin is at like an all-time high. So individuals are taking up Bitcoin as their currency. And you've also seen in Ukraine lots of donations, crypto donations. I think they're up over 50 million as of last thing I read this morning as far as donations go. And but the thing that was most interesting to me is that they're saying that Bitcoin right now, it's not really ready to replace, like the Russian central bank is not going to be able to convert their reserves into Bitcoin. That they actually said, the Chain Analysis did an interview with one of the crypto firms that really monitor this stuff, and they said there's been no new big whales come into the market in the last week or two. So it's so clearly they could be putting a small amount in, but the fact is that crypto just isn't ready for the scale that, like, I think I read like $600+ billion in reserves, that much of which is frozen now because of sanctions. They want to try and put all that into Bitcoin. That's just going to be
It's not going to happen easily.
Oh, and it can't support, a transaction load either. So from a, payments perspective, that infrastructure in there either. So not, it's a great approach, but really not ready for prime time.
Yeah, and who knows if this happened in 10 years' time, when you've got a lot of the when there are more payment mechanisms happening and the transaction throughput is as some of them is as good as Visa and Mastercard. It could be a different story, but this is where we are today. So anyway, I don't want to dwell on that part of the world, and I know it's a very challenging time, but there was actually more fintech news this week that I want to get to. And first thing I want to talk about is earnings. SoFi had what was a pretty good earnings report this week, and their stock has bumped up because of it. But interesting that the revenue was $985 million, up 74% there. Most of that revenue, because keep in mind, SoFi has always talked about all of the many different products they have, but lending is still the core of their business. 764 million out of 985 million in lending revenue, and they are profitable. Adjusted EBITDA $30 million for the year, and they added 1.6 million. And Ron, I know we're going to get to your report in a second, but I do think that SoFi, they just came off a Super Bowl. Obviously, nothing from the Super Bowl was really in this earnings, because it was fourth quarter. But they seem to be in a fairly strong position.
Yeah, it's it's funny that they've positioned themselves as if lending is not that important to them. But then when you look at the numbers, lending is arguably the most important thing to them.
Yeah.
So it's funny how some of the fintechs that have now gone on to buy banks, which is a handful at this stage, the way that they perceive or at least try to put this frame out in the market that they're all these different things, when in reality they're closer to a bank, and being closer to a bank is the best way that they can make money.
Well, they are a bank now too.
Exactly. And it's funny how the evolution of fintech has we're going to attack the bank, then we're going to partner with the banks, then they buy the bank, and they essentially become the bank. And so I think that kind of where we're at today and where it started is quite a fascinating journey.
Listen, guys, SoFi's been around for a good number of years now already, and I don't think it's be surprising to anybody that the lending piece makes up a big chunk of the overall revenue right now. But I think they're very well positioned to diversify from that revenue. Obviously, they've got the banking piece now, but more importantly to me, and why I'm kind of bullish on them, and I don't mean bullish from a stock price perspective, I'm no stock analyst, but just from a kind of a business perspective, strategy perspective, is think of it as the banking services aspect of it. They had acquired Galileo back, 2019, 2020 timeframe, which gave them a lot of payment processing capabilities. And now with the acquisition of Technisys, I think they're really creating an ability to really be a player in the banking as a service space. And then the banking services, thanks to their lending volume, they've been quietly trying to do, selling the loans off to the banks themselves in prior years. In terms of, I'm blanking out on the word, when you bundle the loans.
Securitization.
Not the securitizing, but when you kind of like bundle the loans and sell it off. I'll think of the word, 45 minutes from now. But, they've been trying to do that for a couple of years, and, kind of partnering with the banks. So, I think they're establishing themselves as a, more broadly diversified firm within financial services than just the banking piece. And I think I alluded to you guys that I was doing some forecasts of the digital banking vendors, and they grew year over year 65% in terms of number of banking customers, not lending but banking customers, right, from 2020 to from 2021 to 2022. So I'm very bullish. I think they're building a really nice set of assets and services beyond just their core lending.
Yep.
I also think that the aspect of them owning Technisys and Galileo and having insight into the customers who might be their competitors using Technisys or Galileo, and that dynamic of they own the technology that's running their competitors and how their competitors might feel about that.
Yeah. And not easy to switch off some of those platforms. So
exactly.
Yeah. Anyway, I want to move on. I want to talk about the story you wrote this week, Ron, which I thought was really interesting, talking about the growing domination of some of the digital banks. Why don't you just give us some of the highlights from that piece?
Yeah, I think it's important to note that what I was focusing on and have focused on in a lot of surveys I've done is asking consumers, I ask them a couple of things. I ask them, who do you have accounts with? And I ask, who do you consider to be your primary checking account provider? I don't ask anymore, who's your primary financial institution? I think consumers today, especially those under the age of 40, if you really count it up, they probably have 30 to 40 different relationships. The idea of a primary financial institution does not resonate with a Gen Z or a millennial, but they do have perceptions on who their, let's say, primary checking account providers, or who their primary brokerage provider, or even their primary payment provider, things like that. So I was focused in on the past couple of years asking, who's your primary primary checking account provider? And if you go back 2-3 years, the mega banks, Chase, Bank of America, Wells Fargo, dominated. When I say these are three banks with nearly 2-3 years ago, with 40% of consumers, especially young consumers, saying that one of the three banks was their primary checking account provider. Well, in just 2 years time frame, the mega banks as primary checking account providers, the numbers have divided in half practically, and skyrocketed in terms of the percentage, especially of Gen Zers and millennials. Close to 3 out of 10 Gen Zers and millennials who now say that a digital bank or a challenger bank or a fintech like Square Cash App or PayPal is their primary checking account provider. And, last year when I published something similar to it and the trends were going down for the mega banks, guys, I was getting emails and phone calls from Bank of America disputing the numbers and wanting to tell me how wrong I was and how they weren't losing customers. And I think it's important that this isn't about people changing and switching and closing out accounts. It's about the emotional side of it, the assignment of that primary status that's really changing. And it bodes well for the fintechs and the digital banks long term, even though people still have their traditional bank accounts.
Right.
It's kind of like, I might have a Chase account, but my paycheck is going into Cash App, even though I might have, maybe a savings or a little bit in Chase, maybe, a couple of bills come out of it, but the bulk of my paycheck goes to Cash App. That's my main checking account.
Or you do it the other way around so that if something goes wrong, there's a branch you can go to.
Yeah.
But your everyday payment activity is with PayPal or Cash App or or Chime even is another big one. And so it's really changing consumers' behaviors, but I think it's important that it's changing their attitudes and the relationships they have with the digital banks, who used to be the secondary and tertiary accounts and are increasingly becoming the primary accounts.
Yeah, that's just how I run my. I mean, I still have my traditional bank account. I may never get rid of it because it's nice to have it as as a backup. But all new activity I'm doing through my fintech bank. So I think a lot of people that's going to be the way they'll do it, because you still want to have that. You may want to go and visit a branch for whatever reason, and it's good to have that as an option still. The one thing I want to actually just highlight, I thought was really interesting, was that community banks, you said, are showing growth, but credit unions are not. Tell us a little bit about that.
Yeah, I think the community banks. I will tell you this: 2-3 years ago, from a retail perspective, I was writing off the community banks. I thought they were giving up on the retail market, just doubling down on commercial and commercial lending in particular. But I think probably thanks to the pandemic, a couple of things happened. One of them made them rethink, where the growth potential in commercial real estate lending was going to be. And second, they were kind of forced to deal with a lot of technology issues because they were so used to, well, you got a problem, come into the branch, talk to Sally. Well, the branch is closed now in, July 2020. And so it forced them to kind of rethink their technology delivery and rethink the importance of retail as a growth engine with the potential downturn in commercial real estate and commercial real estate lending. And so I think what it says to me is that, and I put the quote in from Charles Potts, a good buddy who's Chief Innovation Officer at the ICBA, and I think he kind of nailed it. He said, look, the digital bank and digital banking may become the preferred way of banking for a lot of people, but clearly it's not everybody. And there are people who still want that relationship and that access to a person that community banks are going to give people. I also think that during the pandemic, because of the PPP loans, where I think a lot of community banks, you really bent over backwards to get customers their money, that created a lot of goodwill with many consumers. But interestingly, if you look at the data in the article, community banks were kind of growing their share across all generational cohorts there. So even among the Gen Zs and millennials. So not everybody's flocking to Chime, PayPal, and Cash App. I think the credit unions are suffering because I don't think in many cases all of them have technology that's living up to the digital banking capability of a lot of the big banks and digital banks. And quite frankly, and I know I'm going to get a lot of heat from this from credit union people, I don't think we have nicer people and we're not for profit and cooperative story is really resonating with a growing number of people.
Right. Anyway, let's move on. I want to talk about a couple of stories about buy now, pay later that came out this week. We had Zip, which used to be called QuadPay. Now they're an Australian company. They came out and bought Sezzle, which is another buy now, pay later platform. $356 million is the price. They're because they haven't bought them, they're intending to buy. The deal's expected to close in Q3. And the combined company is going to have 13.3 million customers, which is it's not an insignificant number, but they're going up against some Goliath. So it's to me it's logical sort of outcome of going up against some of the biggest names in the industry. There's going to be consolidation at the lower end.
Yeah, there's just too many BNPL firms for them all to survive, and eventually this was a natural way for them to go, just combined because a firm is taking such a dominant space in the market. Block or Square is acquired Afterpay, which is slowly becoming a behemoth in fintech, if it isn't already. And so it's natural for the smaller players. I think the other key piece there is what the CFPB is looking at, which is the BNPL practices and how they might be reported, and credit credit reporting related to that, and what that means for a lot of these companies, and what that might mean for credit scores, and how safe these transactions really are for consumers.
Mm-hmm.
It's probably not a smart idea for me to like disagree with either of you. It might impact my chances of ever getting invited back. But
That's okay.
Disagree away.
I'm gonna like challenge you on this one, Todd, because first of all, I don't think there are too many BNPL providers. I think the problem is that they're all doing the same thing.
Right.
Often, I try to tell the banks who want to get into BNPL that it's not as easy as it looks. It's not a matter of just simply after somebody's made a purchase to say, okay, did you want to split that purchase over, 4 payments or whatever it is? What the smart players like Klarna, Afterpay, and to a large extent Affirm really, I think, understand about buy now, pay later is that it's a tool that influences people's choices of products and providers. It's more of a sales tool than it is a payment mechanism.
Mm-hmm.
And so I think that's one. And if you look at Klarna, who I know, Peter, you may be teeing up next because they announced, huge losses. Despite those losses, I do think they're doing a lot of smart things and building out a commerce ecosystem around buy now, pay later. That's pretty impressive. But they understand that their value is not to the consumer after the purchase, it's to the merchant before the purchase,
right.
Yeah. And get people to do that. Now, so why I'm disagreeing with you, Todd, is that I think the path that the BNPL space will take is specialization in certain areas. I think you'll get, a good example of this is a Lone Star in the Philadelphia area who really knows the HVAC and home heating space. They know how to sell BNPL or point of sale financing for people who for providers of those kinds of services. So I think and there's another one, and then they'll kill me for forgetting their name, who focuses on dental and medical procedures that are not covered by insurance. So there's a market that they learn how to sell certain things, and I think the problem today is everybody's going after the e-commerce retail space. Right. But there's a lot of more opportunities to introduce BNPL as a sales tool and not just a payment mechanism across a lot of different areas. I don't think we've started to see that specialization just yet. But I do think the winners are going to be those that kind of build that ecosystem like Klarna are doing.
And to Todd's point, at least, I think there's only so many paying for generic, mass market BNPL platforms that we're going to see. But I think, as you're right, specialization is certainly coming. But I want to get on to Klarna. Klarna reported earnings, or they did their. They're not a public company, but they still provide some insight into what's going on in their business. They now serving 147 million active customers. That to me is just mind-blowing. That's global. They're big. They started they're a Swedish company. They're really big in Europe. They're becoming really big in this country, and that's just an astounding number of active customers, up 70% year over year. But their credit losses, $500 million roughly, and their actual operating losses, $730 million on revenue of $1.4 billion. So they are they're certainly not close to profitability, and they're still a private company. But they've also raised a boatload, and I'm sure they could probably raise another $1 billion if they wanted to. But they are really becoming, I think, the global leader in the space.
Yeah, I think in one of the articles, I think it was maybe the Financial Times I read, Klarna made it to a point to say that part of the credit losses were due to the investments that they've been making, and that it's something that it's not going to be long term. So we'll see, but clearly, Peter, they are the dominant player today in the market, and to Ron's point earlier, which I certainly agree with, which is the ecosystem side and the merchant side of that market, and they've just done a phenomenal job.
Yeah, 2 quick comments on this, guys. Number one is the 147 million customers that you mentioned, Peter. are probably the same 33 million that Sezzle and Zip have, and the same 56 million that Affirm have. I think there's just a lot of overlap here in terms of number of customers.
I've used multiple ones.
Yeah, exactly. And I think, a lot of the people who do use, the number of consumers who use buy now, pay later will use, there's no loyalty necessarily to the BNPL provider. The loyalty is to the merchant. The other piece towards to the profitability is, it kind of reminds me of Amazon. How many years did Amazon report losses, huge losses, building out their platform strategy. And, Bezos every year would just say, you don't like it, screw you, too bad, we're moving on. He had his vision. And I can't help but wonder, and I don't know that, it's the similar story, but it just kind of evokes the same thing. It's like Klarna's got its strategy. It's building out this ecosystem. It's going global. And I think, it's interesting. They seem to be like, they produced one chart that was just totally incomprehensible. I don't know if you saw this, trying to explain that, well, if we had grown at the same amount as this year and last year, we would have had less. It was like totally incomprehensible stuff. I think they're just trying to obfuscate the losses to some extent. But, I think they're on a mission. I think there's a lot of growth opportunity there. I'm not as worried about the losses as some observers are.
Yep. Okay.
And they know they can probably raise whatever amount of money they need relatively quickly. They know they can do that, which is why they're making such big investments, knowing, all right, we'll just tap the credit markets again.
Yeah, that's why I said they're in no hurry to do an IPO, because they don't need to. They can tap the private markets whenever they want. So anyway, let's move on to Goldman Sachs. There was some news this week about their they have converted all the GM card holders, General Motors. They've taken over managing the General Motors credit card from Capital One. 3 million customers now coming into the Goldman umbrella under Marcus. That takes Marcus, the number of customers they have, to 13 million. And I don't know what they don't get talked about. I mean, it's hard to imagine that Goldman Sachs is like a quiet achiever in this space, but they certainly don't get as much of the press that I read as some of the other big names that seem to be more sexy in the press anyway. But this is in the Goldman are playing. They're playing the consumer bank, and Stephanie Cohen did the rounds this week, and she's plugged. She's going to be speaking at our USA event in May. She's the co-head of the consumer bank at Goldman, and she also talked about the fact that they're making a huge embedded finance play, and that's what this is. This is embedded finance at a grand scale when you're partnering with General Motors.
And other shameless plug, I have a former head of product at Marcus, Adam Dell, on my podcast next week. So coming out in a week, and he had just glowing things to say about how Marcus operates and how different Goldman was compared to what he thought it might have been when he first, when they first acquired Clarity Money, and just the vision that they have for the Marcus brand. And obviously some of that has played out already. And we've talked to many people over there at Goldman, at least on the Marcus side of things. And, they have a lot of interesting things planned for the coming years. And like you said, it doesn't seem like they get talked about in the same way as some of the other fintech brands. But they are certainly one to be reckoned with.
Yeah, I couldn't agree more. And to me, it's kind of funny that what we used to call co-branded credit cards are now being called embedded finance.
Right.
But more than that, though, I don't mean to downplay what they're doing, because I would look at things like their partnership with Amazon and how they are kind of moving into the small business lending. They kind of took over the cash advances, the merchant cash advances, and got into the small business lending side. I mean, it's not just the payment side from the credit card, it's on the lending side as well. And they're building on, the base of customers that they had acquired over years when they offered the savings accounts with the premium interest rates for a good number of years. So they have really become a powerhouse in the fintech space, and, pretty impressive growth.
Yep. Yep, I totally agree. And keep in mind, we haven't even mentioned the Apple Card, which is another big Goldman Sachs initiative there. Anyway, we're running out of time, but I do want to just get to Nubank. There was a really interesting piece in Financial Brand this week about Nubank, and they are the world's largest digital bank. The numbers weren't completely up to date in this article, but when you look at their earnings, 54 million customers Nubank has, all in Latin America, and they are the world's largest digital bank as far as number of customers. The thing that I thought was most interesting in this whole article was David Velez talking about going and starting and opening branches. So we might be going from from branches opening digital to digital opening branches. I thought that was really interesting.
I'll jump in then, Todd, if you're not going to. First of all, I don't know if you guys saw, but Financial Brand changed that. So I don't know if you caught the Twitter conversation today. Brett King kind of jumped in and said, hey, what about WeBank in China? I'm pretty sure it's bigger in terms of number of customers. And so Financial Brand did sort of tweak the title of its one of the biggest digital banks. So they kind of tweaked that a bit. But, not surprising about the branches. I mean, look at even Amazon, biggest e-commerce seller. Then they opened up bookstores, which now they say they're going to close.
Right.
But so it's the same thing with a new bank or any digital bank. They may hit a point in time where it makes sense to create physical presence. And maybe it makes sense at some point 5 years from now that, it changes. It's, they're in Latin America. It's a very different kind of market, especially in terms of technology development. Do we have time for a really quick story, Peter?
We can sure, go ahead.
So years ago, I was doing some consulting and was doing work for a Pepsi bottler that was based in Miami. And we were down in Brazil, not Rio, Sao Paulo, and waiting for a meeting to get out. And we went into the meeting. There were a bunch of business cards still on the table, and they were from Coca-Cola representatives. So I said to my client, I said, isn't this like collusion? You working with Coca-Cola? And he laughed. He goes, this is Brazil. We don't have those kind of laws. He said, what's important is, right now there's no market for Coke and for soda in Brazil. We have to build the market. And so the similar thing here is Nubank, they say, listen, we've got to build a banking market. And the way to do it is through branches in certain geographies and locations. And so not surprising to see that they would do it. It's probably, what they need, and they're smart, to figure out how to best grow the business.
Right.
Thanks for giving me that 30 seconds there. I tried to get it through fast, so
that's okay. We do need to wrap though. Ron, thank you so much for joining us today. Todd, thanks as always. Thank you to
and you're welcome back anytime, regardless of disagreement,
yes,
Ron.
Exactly.
Thanks, guys.
And thank you.
Thank you.
We'll be back same time next week. Have a great weekend, everybody.
See ya.